Good morning. My name is Mike Pickersgill. I'm a partner at the Torrey's Law Firm out of Toronto and the head of our mining practice there. And I'm really pleased to welcome everyone this Wednesday morning. Mining increasingly is recognized as a foundational requirement for the energy transition and an economic engine in countries around the world. And as we heard just now from the Assistant Secretary, the fundamentals and the process of development and the energy transition are underway. So at least notionally, there is broad support for mining and the development and increased development of a sustainable mining industry. But exploration remains challenged. It's a challenging proposition in terms of exploration, in terms of turning exploration into development and financing all of that. And that's a global phenomenon. Whether North America, the Middle East, Africa, South America, the time frames involved are increasing. Our keynote panel today is going to talk about and tackle the question as it was described as that considering it takes on average 15.7 years for the 127 mines open in the last 2 decades to move from discovery to actual commercial production. How can the mining industry bridge the distance and time between discovery and production, and de-risk that period of time? We're going to look at this challenge and offer some perspectives on addressing those challenges. And to help explore these topics, Resourcing Tomorrow has assembled a panel representing an impressive range of perspectives on exploration. I'll start at the end. David Aram is an exploration geologist by background. He's the co-founder and a director at Sandstorm Gold Royalties. He's visited and assessed over 100 mines and over 300 exploration and development projects in his career over the past 30 years. Next is Bill Cobb, Vice President and Chief Sustainability Officer at Freeport, where he has been for 20 years, and since 2010 has led the company's sustainability efforts. In this, his team provides permitting compliance and community engagement support in the development of responsible production framework for exploration and development projects. Next is Sami Saad Al-Harbi, who is the General Manager, Mineral Resources Development at the Ministry of Industry and Mineral Reserves of the Government of Saudi Arabia. Sami has more than 2 decades of experience exploring for precious and base metals, including for the Saudi Arabian mining company, or Ma'aden. And immediately to my left is Gord Bogdan, the chairman of Vera AI Discoveries. He's an advisory board chair for Origin Merchant Partners, a leading investment bank in the sector, and executive chairman of Black Loon Group, a mining investment firm. Gordon brings the perspectives of a distinguished career as an investment banker, as well as serving as a director on numerous public mining companies. So with those introductions out of the way, I'd like to kick off with maybe setting the stage a little bit with you, David. And do you have the...
I do have the clicker, yeah.
Okay, great. So David, last time when we met this time last year and talked a little bit about the exploration shortfall. So in addition to not talking about EU battery metals regulation, but rather talking about the length of time, we talked a little bit about the length of time it takes to get from exploration to discovery, but the starting point for that is that there is a lack of exploration, a shortfall. And that's been marked and dramatic over the past 10 years. How have you seen that change over the last year, or are we still in that spot where exploration is short?
Yeah, listen, apologies. I'm clearly inept at using technology properly. But what I wanted to try and put up was a couple of slides that I used here at a similar panel that we did last year talking about exploration. And what those slides indicated, they were a wonderful set of data from a group called MinEx based out of Australia. And what they demonstrate is really the amount of exploration, how exploration has changed by who is actually finding the deposits over time. Goes back all the way back to the 1900s, starting off with prospectors, eventually changing into really kind of governments and major mining companies, smaller mining companies. But the real distinctive change is in the last 25 years. Since 2000, the huge shift into seeing exploration done almost exclusively by junior companies. And in fact, that's what you see. Another slide that I used last year also as well too described the value of these projects as they're discovered. So this is just greenfields projects, so excluding brownfields exploration that many of the major mining companies end up doing. But what we did end up demonstrating was really a lot of the value has just gone down. Clearly, the money being spent by the junior mining companies on this really outsourced from the majors to the juniors because of lower cost of capital, because of the better efficiencies of what they have. And that's been that trend for 25 years. When we take a look over just from last year, certainly I think what has happened is that there's been a distinct shift to a little bit more capital coming into the juniors. You know, when you look back to 2010 to 2014, capital was really easily available to those juniors. It's been in sparse and smaller and smaller windows of capital open to those same groups of companies over that last time. In this last year, we had a little bit of a brief period where we saw a window open up, but still, the challenge remains the same, is that exploration on a greenfields projects is just not getting done because junior companies are not getting adequate access to capital. And those ones that still is the group that's been charged with finding all of the types of mineral targets, from critical minerals to precious metals, to really through the whole gamut of it.
Bill, maybe I'll ask you to follow up on that in your role at Freeport and one of the majors. What is your perspectives on not only the trend in exploration, but also what David was referring to of greenfield versus brownfield and juniors taking up that role?
Yep. So, no secret, we're fundamentally focused on brownfield exploration. We've got a great portfolio of assets, and we're transitioning from oxides to sulfides in several cases, or expanding known sulfide deposits. That said, we're still doing exploration work in jurisdictions around the world, and we're doing it in partnership with junior companies. And the interesting kind of juxtaposition of that, when you're dealing with the brownfields existing operation, expanding what you own today, you've likely been in that community for potentially decades. So you know your stakeholders, you know the environmental conditions, you're dealing with issues like water supply and things of that nature. Completely different when you're sitting in a greenfield situation. And for those that were in the audience yesterday, you heard Ernie Scheider talk about War Below, the diverse voices he picked up, and it was not just the United States, it was kind of around the planet in terms of some of the projects he articulated. That diverse set of voices, the engagement with external stakeholders, and some of those examples are not in my backyard examples. And he was, throwing out the question yesterday, are there some places you just don't operate or mine? Those influence kind of where you go and the success of your projects. And it's a part of kind of this time horizon. And while, we said 15 years, the United States is second worst in the planet. I think we're at 27. And part of that has to do with the things that Ernie was talking about yesterday. And so there's definitely an influence on that, timeline from exploration to being able to take things forward.
That elongated time period, I think, is a challenge for miners. And I think it's a great way to pivot a little bit to talking a little bit about that extended period. One of the problems that creates is a challenge for funding and for investment, because that elongated period means you have a longer period of risk, a longer time horizon for a return. And it's interesting, and Gord, I with your background as a senior investment banker, interested in your perspectives on this, but the traditional model for the junior miners was to use equity amongst other things, and then when projects got into true development, there was financing available for that project in the form of traditional debt financing or traditional project finance. That's changed, and while gold prices have been on a run, when we've seen the critical minerals fundamentals remain compelling, even if commodity pricing for some of these critical minerals has not, the equity markets still seem to be challenged to support exploration. Is that still your view, Gord? How do you see that?
Yeah, no, thanks, Mike. So just going back, picking up on David's comment about where we're at and the juniors being used as the outsourced explorationists for the major mining companies, and they did a terrific job, and capital was flowing into them. But the return on that capital investment hasn't been very good. We've not had that return. We've spent billions of dollars on exploration, the juniors have, and what have we discovered? What's actually been the discovery? And so it's waned. The things that have been obvious, we have found. Now we've got to go where that are not obvious. How do we find that? How do we fill this incredible need for more minerals, is the theme of this conference here, in copper, in nickel, in not just the critical, all minerals are critical to our social development, period. But our finding costs have increased dramatically, and where to look has increased dramatically. It has reduced. So how do you attract the capital to fund these juniors or any other explorers to do it? So we're kind of caught in this knot. So we have to look. How do we look for these new discoveries when the other ones we've kind of picked up on everything so far? How do we attract the capital? And capital flowing into this sector peaked in about 2012. Mining capital, the entire value of our industry, guys, as we know, you've seen this number, it's probably what, $2 trillion. That's less than the market cap of NVIDIA. One company, think of that. The value of our entire industry, Rio Tinto, BHP, Freeport, all the way down. We need to attract investment into it. Investments, the capital is the lubrication to move all this forward. How do we do that? If we've not been returning to those investors in the last 20 years, we've not had a very good track record of returning on investment dollars and on exploration dollars. So we've got to do that. So we have to be more effective, more efficient. We have to compress the time to it. Right? Compress that time, the 20 years it actually takes to take a project from exploration to discovery, to production, excuse me. Okay, how do we compress it? How do we compress that front end where it can take 5-7 years to get to discovery and you're spending tens of millions of dollars? So we have to be more efficient and look at it differently.
I want to come back to the time frame from a permitting and compression perspective for a second. But Sammy, maybe before we go there, bringing your position and your role in government and that perspective, what opportunities are there to partner with governments or other sources of capital beyond the traditional equity and debt? What role might be there, maybe not only to fund, but also to potentially, through that partnership, accelerate engagement?
Well, I would like to highlight actually 3 key things that we have been doing in the last 5 years. First, I will start with the financial support that we are providing and touch on the incentives that also is being available in Saudi Arabia, and also the development support that we had in the country. Starting with the financial support, actually the government is offering the long-term low interest rate through Saudi Development Industrial Fund. It actually is aiming to support the mining developments. And also we had recently launched the Exploration Enablement Program with a total of $182 million, just focusing on the greenfield explorations and de-risking the exploration investments. And at the same time, we have created the Future Mineral Forum, which is actually a global marketplace and for all the stakeholders to be gathering in one place. And we have been done a lot of matchmaking between family companies and the junior sectors to make up with this consortium, which actually led to or result in a few consortium that they are doing actually works on the ground and during the last 2 years. And the second key element is the incentives. Actually, we have rolled out competitive incentives that actually aiming to support the mining sector entire the value chains, which is including 75% of the co-funding for the CAPEX and also it's 100% of foreign direct business ownership for the companies to come. And also we offering the 5 years royalty fees exemptions. So we call it as a honeymoon period for the companies to come and invest in Saudi Arabia. And the other things is area that is very important that we are really emphasize on is the development support. And we have doing this since maybe the last 30 years, is developing the essential infrastructure in the country. For example, the networks of the roads that we had, and the ports and the railways, and all of this has seamless connectivity for all the mining and the exploration sites. And this is very important. Also, other important area that we are taking in consideration is the building capacity in the country. So we are prioritizing the knowledge transfer by partnership with the global mining companies. And this is actually very important for us to actually equip our workforce and the talents in the market with the latest technical expertise. And then the last thing that I think I would like to mention is that we developed the mining investment law, which actually has a huge impact on the market. And this is have been done in 2021. And after studying the international jurisdictions like Australian and the Canadian jurisdictions, and we came up with the best jurisdiction in the globe, that we have actually been recognized by the World Risk Report in 2023 as the best performing jurisdictions regionally and globally, which actually put us in the place of the best of the top 10 countries with the least legal and the risk environments.
I mean, I do think it's quite an amazing what Saudi Arabia has done in terms of focusing on the development of the mineral industry. In the context has been quite amazing, and is a great example, I think, globally in terms of how governments can be supportive. And you mentioned capacity, and Bill, we were just talking in the green room about, particularly in the West, we see constant cutting of government positions. That's not help. You talked about capacity building that's happening in a positive way. Bill, it's the opposite a little bit in terms of government support in North America. Do you agree?
Definitely it is. And we were talking about the permitting timelines. And clearly the number of people and permitting roles in government, is going to influence that. In the opening comments yesterday, Ro said something that kind of caught my attention, that you talk about these long permitting timelines, and the implication is, well, that's somebody else's issue. In reality, it's somewhat also self-inflicted, and in part it's because of what we find in exploration, geology, the mineralogy, things aren't always perfect. And how many of us in the room, and I've been doing this over 40 years, I don't think the storyline's changed. There are some easy projects that are going to move quickly. The grades are so darn good. The engineering is so straightforward. How many of us have those kind of projects in the portfolio? Probably not very many. And so what you're ending up having to do is, drill out, get more data. That takes time. Then you're going to go take a look at your first cut. What's a project? And then you're going to get your first cut capital numbers. Doesn't look so good. You're going to go back, drill some more. You're going to rethink the process. You're going to try different configurations. And all of that rework influences the permitting timeline, because every time you change the project concept, you're going to go back and revisit consultation with your communities. And you might learn some things from the communities that force you to go back and rethink part of your project. Good example would be, if you're in northern Chile and you've got a water supply constraint and you're going to have to go to the coast, do desal, build a pipeline. Pipeline's going to go through communities. They're going to influence the design of that pipeline. It's going to influence the capital number. And so the iteration of what it takes today to get the underlying data, do all the engineering work, do all that consultation with those diverse voices that Ernie was talking about yesterday, and then you get the CapEx number. And maybe that's too big. And so you also get to ride the commodity price cycles. And we were talking yesterday about the influence of commodity prices, and it was lithium and cobalt and nickel as, the prime examples. And you heard Friedland yesterday say he's fine at $4, but Wood Mac says it's going to take $5 before you're going to see a big chunk of copper come onto the market. Again, we're all sitting in this iterative process. And at the end of the day, that's probably what's influencing that 27 years in the United States. And then if you take that into a government system that may not have enough people, that's just, adding kind of insult into injury in terms of that entire process.
I want to just ask one quick follow-up for you, Bill, and then David, turn to you at one point. But Bill, one of the things we talked about the other day when you just mentioned commodity prices and that is there a role for government in the mineral industry, and particularly in critical minerals, where we see maybe a bit of different, the policy goals and the 15 to 20 to 27 years, depending on your jurisdiction, they don't align. Is there a role, and the commodity price then creates further delay as you're describing it. Is there a role for a commodity price support from governments?
It's an interesting question, and it was in the media probably about 2 or 3 months ago that raising the question, should there be price supports for critical commodities, and again, using cobalt, lithium, nickel as examples. Haven't seen that advance. For those of us fortunate enough to participate in the Monday session with governments, you heard things like loans, equity participation. Didn't hear people wanting to step into, kind of the global commodity markets. But it's an interesting question to kind of watch and see if, people try to advance that idea.
I mean, there is precedent for that to a certain extent, and it was not entirely successful, I would say, particularly in the Canadian model, but we had power purchase agreements to support the rapid development of renewable projects.
Yep.
And that would be kind of the parallel. Before we leave funding and financing for this, SCAP, David, I wanted to turn to you, maybe just to comment briefly on another form of alternative finance which remains popular, which is, given your role as a founder of Sandstorm, the royalty and streaming model, which, at least from our perspective, where we sit doing a lot of these transactions, that model, historically later stage in the production profile, profile, is inching further and further into at least into early development funding, if not exploration funding. What role is there for that?
Yeah, I think it comes down to really the term of capital and the timeline of capital that people are looking at today. The problem is that the mining industry matches up very, very poorly with the conditions of what today's public capital markets are. They have gotten, and I think it's just about the same timeline as we've seen the exploration. Last 25 years, you've seen timelines of what's considered long-term capital in the public capital markets just gets smaller and smaller and smaller. The more information that flows around, the quicker and quicker the trades are going to be. Now, so much of the trading that most of the public companies that are trading on Toronto, New York, on LSE, so much of that is algorithmic trading. So it's almost on a nanosecond basis that you're seeing trading based on. Mining needs long-term capital. You cannot make a plan, you cannot design a project on a minute-to-minute, quarter-to-quarter, week-to-week perception of really what the price of the commodity is that you're looking to mine. So that's where I think the royalty space comes in well, because it is that access to long-term capital. Other things are things like what Saudi Arabia is doing, and groups that are looking to dedicate long-term capital because they realize, the realization is that in order to get this supply to the market, you need capital there for a long time. You can't have them bowing out because the price of copper's dropped 25% because of some kind of market correction that's happened. So that's where the royalty and streaming place, I think, fills a good spot. You could almost perceive them a little bit like they're almost like that banks of long-term capital that are going into this. We've seen it more on the production side, deleveraging side, but absolutely, the streaming and royalty companies, they want to look at the earlier stage projects. They want to find those assets they believe are going to transform or going to change, because that's the perception you have to do. You're trying to make any project at that early stage, you're taking a ridiculously small amount of data to make vast interpretations of how this project is going to perform over decades. So that's the thing you really need to be able to do, and I think that's why you will see. That's why royalty and streaming companies are getting bigger and bigger. They have access to capital, and they understand from day one that they're entering a position that they're not going to liquidate at any point over the timeline of the company, so they're ready to stick with it.
It's an interesting point you make about being kind of a bank of capital, because what we are seeing is that these royalty and streaming models, as they move earlier in the time horizon of a project for funding, they start to take on more and more attributes of debt because of the risk profile that comes with it in terms of protections. You also mentioned data, and I think I'd like to just, with the 10 or 15 minutes we have left, pivot for a moment to talk about exploration advances and technology and collaboration and the role that can play in increasing exploration, but also successful exploration and turning that into development. And Gord, maybe you could start with you and have you touch on a little bit AI and the role that can play in the mining industry, and then in particular what Verai is up to these days.
Sure, no, thanks, Mike. So, yeah, just to tell the Verai story, it goes back over 12 years to the founders of the company that were working in AI in different sectors, in the intelligence sector, in the pharma space, looking at using AI for different applications. And they looked at this challenge that we have as an industry of how do we find more, particularly where we've seen the obvious things, where do we go? Undercover. There's massive amounts of discoveries to be made. That needle in a haystack, finding that mineralized needle under this massive cover area. And how can we look at that? How can we detect that? We don't have the geology on top to lead us into that. Can we use, what data is there? Geophysics. I'm a geophysicist. I did a decade of that. I started my first company in geophysics. And recognizing, looking at aeromagnetic data, and processing that data, looking into the data, into the raw data, and looking for that pattern recognition, training that the AI models, using that data to recognize the unique signature of a particular deposit. And so Verai created a library of deposit types, looking at and the signature using AI that then could predict where that similar deposit could be occurring undercover. And then 3 years ago, they started looking down in Chile, down in the El Indio Belt, and then moved up. And so we've now, using this, we've put a portfolio together of over 80 of these discovery targets predicted by AI in areas that are undercover. And we've actually have the leases on these, so we have the mineral rights to these. And these are, we've looked at in areas in Canada, in the Sudbury Basin, in Arizona, down in Chile, and in Peru. And we've trained the models on existing mining operations, recognizing the deposit of porphyry copper, IOCG, mantostype, and said, oh, look, we've picked up over here 10K, 20K away, 100K away. Here's something else sitting underneath that has the same signature undercover. So we're looking to be this strategic exploration partner now to the industry to come in. We're not trying to be a mining company. We're not trying to be a drilling company. We're here to say we have this delineated, this discovery, through AI, through the ability of its technology, and looking to partner with mining companies to move this forward. So what we've done is to get to this level of the confidence that we've had of this discovery that would have taken the exploration junior company 5, 7, 10 years to go through the process, and tens of millions of dollars to get to this level of confidence that we have that there is something sitting there. So we're compressing that exploration period right up front.
Because you've built this library that allows
built this library, and we have the confidence in the data through the technology. We've partnered with MIT, our data scientists coming out of MIT, and we're working with the data scientists and the geoscientists together to look to be, this is a combination of not just looking at the data, it's not just the data itself, it's working, how does that interpret, not interpreting the data, but where is that data applied in terms of the geological setting, and making sure that we're looking at things that it's part of that discovery. So.
Bill, I want to come back to you again on brownfield. You mentioned that's kind of the focus. Is there a role for this kind of exploration technology and what the majors are doing given that focus?
Certainly, big data is a critical element of, I think, most of the major mining companies. Operationally, in whether it's open pits or extrapolating geologic information, we have a lot of data, and we mine that data, no pun intended, with a lot of data scientists. One of the things, and from a brownfields perspective, it's kind of a play on the exploration AI piece, is using that data to take a look at things that otherwise historically have been viewed as waste. And we have a major effort underway to go back in and take a look at waste piles that have copper in them, and roughly 30 billion pounds of copper in a number of deposits, and using a lot of advancements in chemistry, coupled that with AI, because again, we're drilling into waste piles, pulling the data back, taking a look at different chemical applications, using heat, using covers, and we've been able to, so far, produce about 200 million pounds a year, with a target of 800 million pounds a year. And we were talking at the start, that's a major copper deposit, and it's sitting in a waste pile, or waste piles. And the big data element of this is really core to making that ramp up successful. And so, absolutely, I think, major companies are taking a look at the data that we've got, and using these applications. And clearly there's a lot of operational efficiency improvements that also we're using AI for, and again, big data. But from an exploration development perspective, I think the leaching, the waste rock example is probably the largest one in our portfolio.
And just to pick up on that, so Virai, we're not really looking at big data. We're not just trying to throw in everything into the mix here. It's looking at the right data that's diagnostic, that can be there to be used to look for that mineral needle in that haystack. So from a brownfields exploration standpoint, you've got an operation, and we can be looking at taking our model, modeling on your deposit, and looking at that mine. Is there something like that sitting out there, 10, 15, a satellite deposit that sits there undercover? So that then you can use your infrastructure. You've invested billions of dollars in your infrastructure already. So it's not greenfield. You can then lever off of what you've already invested here to then process that ore in your existing facilities. So it's a brownfield expansion, effectively, of your reserve base. We can be using AI for that delineation, that discovery that, we've looked at, that's been undercover. We've never spent any capital on it because we didn't want to take that risk. Well, now we've minimized that risk by looking at it in a way. And we couldn't do this like 35 years ago, just to date myself, when I was a geophysicist, running around collecting this data. We were interpreting it. Now we're actually looking into the data itself. We have the technology to be looking at this. That same data, aeromag, but looking at it in a different way. And so exploration, we're looking at it in a different way.
I think it's interesting because we talked about the length of the time frames, the concern about infrastructure, and all of those advantages. And maybe that tells us a little bit that brownfield is an area that's more likely to have a shorter period of time, a little less risk, maybe attract more equity capital still, which is still required in the capital stack, notwithstanding the challenges. And so that may be, a road that becomes more and more traveled as we're trying to look for opportunities to expand mineral development. But when we're thinking about those challenges, infrastructure, I think that comes to another key part of collaboration, which is collaboration with other stakeholders. And Sammy, maybe I could ask you to talk again a little bit about some of the collaboration you mentioned infrastructure and road networks, ports.
Yeah.
There's also generally a sense, and as I understand it in my legal role, that there's a lack of viable or accessible refining and smelting capacity globally, particularly in a world where we have increasing security concerns or challenges. What role the government has collaborating with the mining industry to make exploration more feasible?
Yep. Actually, the strong infrastructure base is crucial in investments and encouraging investments in mining. And we have invested heavily with one of the key assets in Saudi Arabia is a North-South Railway. And this is actually to facilitate the transportation of the raw materials from a different part of the country to the Ras Al Khair port, which is located in the East Province. And this is actually making and facilitating all the investments in that area and encouraging the other mines to be built. And we have the right hub to be exported on the eastern side. Also investing in the energy infrastructure. It's important to ensure that we have a low-cost energy supply and reliable, and this will support actually all the downstream projects in the area. And we had actually the largest aluminum smelters in Ras Al Khair, where actually you can find also ma'aden aluminum and the phosphate complexes in the eastern port, which is actually showcase that the efforts that we have done and the value addition that we make for these projects.
Yeah, it's interesting. I think, coming from the Canadian perspective and thinking about infrastructure, and, we have a classic critical minerals example in Northern Ontario, the Ring of Fire, which has been handcuffed for a generation almost now because of infrastructure issues and the ability to get that infrastructure built and approved. Bill, you were talking a little bit about the majors, and David, you were mentioning that outsourcing exercise that's happening. I think one of the other interesting interplays, if I may for a minute, that we are also seeing that brings the technology component into this is the role that some of the majors are playing in terms of using their technologies as part of the story for their investment into and support of junior companies. And I'm thinking of examples like BHP with its Explore, quasi-incubator kind of model, Rio Tinto and its Newton venture, which is taking investment stakes in juniors and using their what they view as proprietary technologies for exploration analysis, I guess is probably the right way to think about that particular technology, and using that as a basis where they'll fund companies and those companies will utilize that technology to try and make their project expand, grow the project, and make it more viable in terms of its investable case. And I think all those are great examples of how people are trying to collaborate, use technology to shorten this period and support the development and exploration.
Yeah, I think that is the key. I mean, in the end, in that search for long-term capital, in that problematic permitting, it has to be collaboration amongst almost everybody. Technology for sure is key, but figuring out that key between the permitting side of things, having more, nobody's talking about cutting out any stakeholders in this, but let's create some kind of, fluid, dynamic way to be able to demonstrate that these projects that are everybody has to acknowledge is going to change and evolve over time. They have to figure out how to work effectively and work in maybe not a perfect way, but at least a workable way to make sure these timelines happen. You don't have to drop the ball for that, but you need that collaboration. You need to collaborate with that long-term capital commitment. You need to figure out a better way to make sure that capital is matching up with this goal and this vision at hand, which is to get through that exploration project. Get these important assets into that production phase. So it's going to keep everybody happy with how it works. And the only key is collaboration, less competition, less adversity, more acceptance, and really understanding that the projects from all sides, everybody has to realize they're going to change over time.
Thanks, David. We are at time, but I think hopefully we have a second for if there's any questions.
I think we need to sort of like move to the next presentation. So,
Well, let me just say that we're around, so if there are any questions, any of the panelists would be pleased to discuss them. Thanks, Andrew, and thanks to all our panelists.
Thanks, Mike.
thank you very much, and can we give a warm round of applause for a really excellent session?